The Edgeless Swordsman here. This video will be about bang for the buck when it comes to exploration plays, and how not all exploration plays are created equal, and there's a lot of factors I think that play a part, which puts some exploration stores ahead of others, especially when you account for, let's say, both return on investment and how quickly said return could come, basically the time value of money. So I'm just putting up one article I did on Condor Resources. I did that in 2020, I think. Unfortunately, I haven't drilled their flagship target yet, which is a shame, but I made the point that they were drilling a high sulfidation, or they were gonna drill a high sulfidation system, and the point being that a blanket target like this, you can see that you don't require that many drill holes to basically outline a very large deposit. Initial resource 5.5 million ounces. That could, I mean, depending on how many rigs you have, etc., but it's like 1 kilometer scale. So I don't know how many drill meters this would be, but you could basically do a grid drilling program here, and you would basically infer a multi-million ounce deposit right off the bat. So that's like, it doesn't get much more bang for the buck than that. The ROI would be obviously substantial. I mean, let's say it cost them, I don't know, 10-15 million, if even that, to drill all these holes, and you would get 5.5 million ounces, at least in the inferred category, let's say, out of that. And how much could that be worth? Today it would probably be worth, I don't know, $1 billion, something like that. And they could probably drill this, within a year. So that's basically the type of exploration story where you can get, you would know pretty quickly if it's a lot, a decent amount or a low amount of metals in a system like this. So obviously ROI, return on investment, when it comes to drilling, could be extremely high. Rate of return, let's say, how quickly you could actually outline and drill up 5.5 million ounces, would be extremely high. So for a relatively low cost, you could de-risk a huge amount of value in a very short period of time. And that's not too many exploration stores that I know of that fits this description. That was the appeal with Condor. Unfortunately, they haven't gotten around to drilling this, and I compared it with, compared to this kind of 5 million ounce deposit. This is the world-class Windfall deposit belonging to Osisko Mining, and there's pretty interesting, here's from their latest slide deck. Here you can see meters drilled. They're up to pretty much 1.6 million meters of drilling. And now they're up to, let's say 6.7 million ounces. It took them around almost 1 million to prove up, let's say 5.1 million ounces. For sure, this was not 1 million meters of drilling. And you can see also on the timeline here, 2015. I don't know if they were, inactive or what happened, why it's such a big jump, etc. But let's say it took, given how many meters they actually drilled, so let's say it took 5 years to drill almost 1 million meters and prove up 5.1 million ounces, and that's a success story. They've diluted the shit out of the company, so it's like shareholders haven't been too, They haven't been too ecstatic, and that's obviously the problem with a nuggety system like this. That it requires so much drilling. Let's see if we can see the drill traces. Well, here you see a bunch of drill. I mean, just look at how many holes have been drilled here. I hope I thought they had one where you could actually see how many. Maybe I have it here. Yeah, okay. Look at the depths here, and look. Let's say, okay, they're probably, what's it called, wedging their holes, etc. But I mean, that's a huge distance to drill to hit a target down here, which is hard to hit to begin with. I mean, compare that to just planting a drill and pretty much drilling almost vertical, just down a few hundred meters. So they could have proven up I don't know how many deposits of this kind for the same drill meters that they drilled up this 6.8 million ounce resource. So this is obviously, this took, well, five years to get up to this level, and it costs probably hundreds of millions of dollars to drill. So obviously not the best bang for the buck, and certainly not the highest rate of return. And that's despite the fact that their Windfall deposit is a world-class deposit. So it's almost like, yeah, you were right, there was a world-class deposit there, but it was so costly and took such a long time to prove that it actually, the end result, in this case at least, didn't prove to be that good. But I think there's a I don't remember if it's this deposit or whatever deposit it is, that they just drilled, some junior just drilled, I don't know how many holes, but not too many, and then they got bought out for $1 billion or whatever within a year. So that's obviously a dream case scenario. And I mean, two good examples of this, or two examples of exploration stories that I really like, and or from a tactical and strategic standpoint, is firstly Eloro. Some of the reasons being huge system, runway for growth is certainly very, very large. They have yet to drill one blank hole, so they're hitting something pretty much, every time they put in a hole so far, they've hit something. So there's not even really, I mean, the ROI on drilling is obviously big in that case, because they're finding at least something every hole. So even though it sure might not be, truly economic or a barn burner hole every time, but it's like they're not drilling any 100% waste even. And it appears that they might be onto an area where it actually might get better and better, so the ROI on drilling might actually go up. And since they have 4 rigs and drilling with no blanks so far, the ROI and rate of return is huge, because I think I don't remember where, but I mean, they haven't even been drilling this project for too long, and they're already up to what I believe to be a pretty huge amount of metal endowment in this system, even though it's not in black and white resource yet. So from a tactical standpoint, I think Eloro is one of the best cases I've seen. Hit rate, 4 drill rigs, size of the system, the apparent quality of the system, wide open, etc. And they have, I think, thousands of meters in the lab still, and we don't know. It might get better and better as they close in on the porphyry. And I mean, I think it's a truly unique story, and I think this could grow for quite some time. And at the pace they're growing right now, I'm holding my shares tightly. Let's just put it. Let's just say that. Another one that I think is pretty unique is Goliath Resources, for a few reasons. First of all, it appears to be an incredibly predictive system, because the first 24 holes they drilled into this system, every single one hit. Even the, I don't know if it's marked. Well, here is that almost 1 kilometer step out hole. So if you have this apparent continuity, that suggests that there's a good likelihood of all these other holes hitting, and they know it's outcropping to the sides, etc. So that's just a bit remarkable. It's kind of like that high sulfidation system where you have a predictable blanket, and you could do, wide space drilling and basically infer a huge resource from just a few holes. So if we do some math here, I mean, we're using Quinton's 1.5 million square meters estimate, average thickness, let's say 6, average grade, let's say 6.35, and then we get a potential target size, and that's just from this triangle here. Then we have the extension, and in an even newer slide they have a new target up here as well. And this is still, I mean, they're going to do one hole down here, so this might still also be wide open. And if, I mean, after talking to some people, we probably can't expect that 100% of this area will have economic grade and thickness, let's say. But if we assume that 30 to 40% is subgrade material, but there will be areas where it's considerably higher, because I mean, what the first hole was like, I don't know, 35 meters of like 8 grams per ton AU equivalent. So some areas I think will be truly blowout holes. Some will probably, I don't know, 4 meters of 3 grams, maybe 2, maybe less than that. So okay, let's discount that. But could end up, theoretically with, let's say, 50 million tons at a whooping AU equivalent grade of 9 to 10 grams per ton, and let's say 4.5 million ounces from just this coming drill season. So imagine the jump and ROI on this coming campaign if the company could pretty much immediately jump from having no resources to at least an inferred resource of around 4.5 million ounces at that grade underground in British Columbia, the Golden Triangle in British Columbia, with the pay zone being above where they would probably put a ramp and an adit, etc. So that would probably lower operating costs, because gravity would be working for you, kind of like block cave scenario, which is famous for having lower operating costs. And the preliminary metallurgical results were great. So I think, I don't know if I've seen a exploration story like this. And one could play around. I mean, what would 4.5 million ounces be worth? I mean, if you use just this zone and say $100 per ounce, that's 450 million ounces. I think I've added some. I put a de-risked endowment of 2.25 million ounces for extension. So, but let's just say 4.5. That'd be 450 million. So that's I think it's trading at around 80 million right now. Let's say if we take, I mean, again, I don't. It's very hard to know exactly what value per ounce one should put, but it's like, given again the metallurgy, the jurisdiction, underground, the apparent thickness, and if we can have, at least higher grade areas that run 9 to 10 grams per ton. That would be, one of the highest grade mines around. So I would assume that margins would be high, and again, boosted by the apparent excellent metallurgical qualities, and the fact that the actual most of the deposit would be above the ramp. So who knows? Maybe $150 per ounce would be a low number. Maybe I don't want to guess too much, but we know what okay, this is obviously not as high grade as Fosterville, etc. But we know that Fosterville was worth multiple billions from let's say 4.5 million ounces. So I actually don't think a billion would be pretty realistic, probably if these qualities, etc., and if these scenarios held up. So I think it's one of the most obscene bang for the buck exploration cases, and what I like a lot is the fact that so far they had 100% hit rate. So it's not like I put a 5% chance of mineralization. The mineralization that's outcropping on the sides, etc., and it's been shown to continue 1 kilometer down dip, that it actually is present in large part of this target that will be tested. And then you get these as bonuses. So it's like, I don't know, not to say too much, but I mean, if they hit in this hole as well, and given that it appears that the zone has been broadening out, so maybe, boost this number by 30%, or I don't know, perhaps more implied. Obviously, some bullish assumptions in that case, but or this target, if this is a down dropped block of the shorebed zone here, because in that case this should have pretty much the same properties as this mineralization. So I just think it's one of the most obscene exploration cases I have yet to come across, and for the main reason being, or a bunch of reasons actually, but if I had to sum up, apparent continuity of the mineralization, 100% hit rate, size of the target or targets, de-risking of set targets by this down dip hole, the fact that it's outcropping on the sides, the fact that this hole here had multiple intervals, so it doesn't appear that it's becoming worse, at least, but it can have something to do with this cross-cutting structure, I guess. And then you again look at potential grade, which brings high margin. So the value per ounce goes up. I mean, 4.5 million ounces of this grade, coupled with the metallurgy and the fact that gravity would probably help you. That's just gonna hike up the value per ounce here. So I mean, this could be, there's probably multi-million ounce deposits that are almost worth nothing, but you have Fosterville that's worth billions with the same endowment as another play that's almost worthless. So I mean, the main point is that an ounce in the ground is only as valuable as it is to take out of the ground, and then multiply with how many ounces you have, of course. So I think, I mean, this might be a low ball estimate in a real actual mining scenario, but I don't want it to get too hyped up, let's say, because I think this is more than enough. Yeah, so I think there's a possibility that Goliath will actually be my highest earner this year, simply because it's one of few with a profile like this, and it's not going to be as large as Eloro, obviously, but it has the jurisdiction in favor of it. And yeah, it's basically a mini Eloro but in a better jurisdiction and gold and silver, and could have higher, let's say, margins at least per ounce. Even though I think Eloro is gonna be way, way, way bigger than. I mean, if you do some math on some of the Eloro stuff, I mean this thing here. I mean, I have a blue sky number of like, I don't know, 57 to 64 million ounces AU equivalent, which would obviously dwarf this. So yeah, no, just to wrap up, I mean that's why I've talked a lot about Eloro and Goliath, and why I have them in my top 5 position sizes right now, because I have added and haven't sold, because these stores have just gotten better and more de-risked, and at the same time, don't you know? I wouldn't bet the farm. I have a sizable position in Goliath, for example, but there's no guarantee that they will hit all of this. But at the same time, given that we know they've hit this area, so it's like, okay, you know, let's say, what's the possibility of them having at least 1 million ounces of very high grade? I mean, that's probably worth something. So it's not like I think it's gonna go to zero. I mean, the probability of this being worthless, that they will miss in everything except every hole that they've drilled so far, which have hit in every hole. I mean, that I think that's kind of low. Maybe I should actually explain it a bit better than now, but I'm a bit tired, and yeah, I hope you at least got some food for thought when you consider exploration plays. I mean, consider the ROI. How much value is the company presumably proving up with each drill hole, and how quickly can they prove up? What's the pace of proving up, let's say? Because if this was a very nuggety system, etc., it might take them, you know, again, let's look at Windfall. I mean, if you have to drill 500,000 meters to prove up 3 million ounces, maybe it's not the best exploration story. So just consider those aspects, I would say, when you evaluate exploration plays. I mean, obviously, the margin of safety and chance of success, etc., plays a part. But again, that's why I think Eloro and Goliath are pretty unique almost in that respect, because Eloro has yet to have a blank hole, and the same goes for Goliath. So it's like a bit of a drill speculator's dream so far, and I can see a lot of growth ahead for both of them. Eloro is less risky, I would say, but I think Goliath could have a higher quantum leap in the next drill campaign. And obviously, it's like the market is sleeping still on Eloro and not giving it the credit it deserves, I think. So it's like, yes, that plays a part as well, but that's also why I think it's less risky, because it's so discounted by the jurisdiction. Do your own due diligence. I'm biased. I have sizable positions in both companies, and they're banner sponsors as well. Thanks for listening. Bye.